Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson.
Location tracking. Learning outcomes. In this lesson, we'll cover using location tracking in QuickBooks Online Plus and Advanced. Topics: when to use location tracking, how location tracking works, enabling and setting up locations, using location tracking, running reports by location, things to note when you run a report by location, reclassifying transactions categorized by location, using journal entries, considerations when using location tracking, classes and everything. Tracking by class is a powerful way to improve the level of detail in your company reports. However, clients with operations in more than one site often need to track performance and profitability by location, so they need an additional way to track their transactions. How can QuickBooks Online help? Location tracking in QuickBooks Online Plus and Advanced allows clients to categorize transactions by where they were made. This could be a department, building, city, or even a state. You can use this data to monitor each location's performance and compare figures from multiple locations. Want even more comprehensive reporting data? Combine location tracking with class tracking and you can compare the profitability of activities at each location. When to use location tracking. How do you know if your client can benefit from location tracking? Here are two examples of how businesses can use locations and classes for business reporting. Select each tab to learn more. Retail business, construction business, retail business. A small chain of department stores is using class tracking to see which of its departments, product lines, are most profitable. With location tracking, the chain can track these activities by each store based on its geographic location. How would location tracking help? Thanks to location tracking, the client can see if sales by department are similar in all their stores or if some product lines are more popular at different locations. Construction business. Clients can use location tracking to track activities by more than just geographic location. For example, a construction business is using class tracking to track activity types such as design, construction, and repairs. With location tracking enabled, the business can also compare activity types, whether they were done for their commercial or residential customers. How would location tracking help? Let's say the company made a total profit of $2,000 from their design work. With location tracking enabled, they can see that design work for their commercial customers generated $3,000 toward that profit, whereas design work for their retail customers made a $1,000 loss. The client can now decide if that area of work is still viable. How location tracking works. Location categories can be geographic, such as properties or towns. Location tracking can also be used to categorize transactions by department or division. By assigning a location to transactions and activities, clients can see which activities in each location are profitable and which aren't. They can also run reports on individual locations or groups of locations and compare activities by location. Select each question to learn more about location tracking. What if a client wants a more detailed level of reporting across locations? This is where sublocations come in. Sublocations allow you to add an additional location category to each transaction, giving you more comprehensive reporting information. Let's consider the previous retail example. The client has several stores in one city and is tracking transactions by store. Imagine that they've recently opened an additional store in one city and 2 more in another. They now want to compare sales by department across all their stores in each city. You can do this with location tracking by grouping the store locations under a new parent location, which in this case is each city. The stores are then classed as sublocations, and the existing classes for product lines apply to each sublocation. Note, in this example, we group the existing locations under a new parent location. However, you can also add sublocations to an existing parent location. Can the client add more levels of sublocations? For each location, you can add up to 4 levels, tiers, of sublocation. So each location is limited to 5 hierarchical levels, including the top level, parent, location. However, there is no limit to the number of locations and sublocations you can create at each level. However, keep in mind that QuickBooks Online Plus has a limit of 40 combined classes and locations, and this includes sublocations. In QuickBooks Online Advanced, you can have as many locations or sublocations as you want, as with classes. The only limit is the number of levels. What is the guidance for setting up locations in QuickBooks Online? Keep the following guidelines in mind when setting up locations in QuickBooks Online. Any company can have only 5 hierarchical levels of sublocations, including the top level. Sublocations count toward QuickBooks Online Plus usage limits. A location can have only one parent. You may not assign a sublocation to multiple parent locations. If you wanted several locations to have a specific sublocation, you would have to create a sublocation under each parent location. With class tracking, you can assign a class to each line. However, with location tracking, you can only have one location per transaction. This is because location affects both sources and targets. This means that if you run a balance sheet by location and use the normal workflow, it will balance. When you enter journal entries, where there is no source, you need to make sure each location has a debit and credit with the same dollar amount. Pro Advisor Tip: how you set up locations directly impacts reports, so think carefully about the hierarchy you set up for your clients. QuickBooks Online Advanced also allows clients to set up sales-related client users by location and then filter them according to company location. Enabling and setting up locations. Getting started with locations is pretty straightforward. As with all categorization work for clients, you'll need to think carefully about the structure of their business and the levels they need to get the information they want. There's a fine art to getting the right amount of detail in a report, but taking the time to get this right at the outset makes things much easier later. Let's look at how you can set up locations for a client. Select the gear icon and then Account and Settings. Select the Advanced tab in the left-hand navigation. Select the Categories section to expand it. Use the slider to turn on Track Locations. You can now use the Location Label drop-down to choose the type of location to use for the location tracking category in QuickBooks Online. Labels include business, department, division, location, property, store, and territory. Once you've selected a label, select Save. Finally, select Done. Now we can add some locations. Select the gear icon and then select All Lists. Here you can see that a new selectable option, Locations, is available, so select it. Select New to add a location. A pop-up screen appears, giving you options to specify unique settings on sales forms for that location. You can specify the form title, company name, address, email, and phone number. Now set the location. This isn't a sublocation, and for the moment we can leave the other options blank, so select Save. Back on the main screen, you can see the first location is set up, so you can now add a sublocation to it. Select New again. Then, in the pop-up, add the sublocation name. This time, check the As a Sublocation checkbox if the sublocation's telephone number and address are different from the default address and telephone number in Account and Settings. You can edit these fields so that they appear correctly on sales forms. Select This location has a different address where customers contact me or send payments, and add a new address. Then do the same for the phone number for the bottom option. Note that if you specify these settings for a location, it will override what's in the company settings. Select Save for the new sublocation. You can see it on the location list screen. Now let's enter a second sublocation for a company office in the same parent location, using the same method. We've now set up 2 operating locations that can be used to categorize transactions. Using location tracking. Let's look at how to use location tracking when adding or editing transactions. Location tracking allows you to filter and view reports and manage groups of transactions by location. For example, you can limit the bank deposit page to show only customer payments for each location. This lets you see all the payments received for one location and deposit them as a group to that location's bank account. Similarly, you can filter the Pay Bills screen by location and pay bills just for a particular location. Running reports by location. Now let's look at what information you can get when you run a report by location. Select the tabs to learn more. Profit and Loss by Location Report. Customized Balance Sheet. Profit and Loss by Location Report. The Profit and Loss by Location report shows you all the transactions assigned to a particular location, and tells you how each location performed compared to others. Transactions with no location will be listed in the Not Specified column. If there are no transactions for a particular location in the reporting period, that location won't appear on the report. To run the report, go to Reports from the left-hand navigation and select Profit and Loss by Location in the Business Overview section. Choose all dates for the date range. Here's an example of a profit and loss by location report for all locations. How can you filter the report for one or more specific locations? To filter the previous report to show transactions for Tennessee only, select Customize from the report header. Scroll down to the Filter section. Check the box next to Location and then from the drop-down, check the locations that you want to filter. Then select Run Report. What does the filtered report look like? Here's the profit and loss by location report filtered for Tennessee. Note that when you filter a report, it's best practice to change the title to indicate the specific locations that it's for. Is there an alternative way to create a profit and loss report filtered by location? Yes. Run a regular profit and loss report. Filter it for the location of Tennessee. Retitle the report to indicate the filter in place. Here's an example. Customize balance sheet. Unlike profit and loss, there is no default balance sheet by location report. However, because locations affect the source of the transaction, you can customize a balance sheet to show locations by choosing locations from the display columns by drop-down. Things to note when you run a report by location. Not all transaction types support a location field. In most cases, you can't avoid using these transaction types. However, they can lead to unbalanced locations on a balance sheet report customized to show locations. The following transaction types don't support a location field. Transfers instead use a deposit or expense transaction to indicate the funds being transferred from account to account. Sales tax payments. Sales tax and payroll adjustments. Paychecks. Receive payments. Pay bills. Let's look at unexpected results related to the last two, receive payments and pay bills. Unexpected results with receiving payments. Most organizations use receipts or invoices to record sales activity, with received payments grouped into deposits. Typically, you don't enter sales directly to an income account on a deposit. Instead, you use a received payment transaction to receive payment for an invoice. The receive payment screen doesn't have a location field. Instead, the location is determined by the invoice to which the payment is applied. So what can go wrong? If a single payment is applied to multiple invoices with different locations, only one location will be assigned to the payment. Also, if the location is assigned to the invoice after the payment has been received, QuickBooks Online doesn't go back and assign the location to the payment. How can you avoid this? Even though only one payment is being received, treat it as several separate payments and enter it into separate receive payment transactions. That way, QuickBooks Online will assign the correct location on each. You also need to treat each deposit as several separate deposits. Filter the payments for each specific location so that the deposit also balances by location. Although you're only making one deposit into the bank, this will likely create multiple deposits. When the deposit comes through bank feeds, match it to the multiple deposits you created. Unexpected results with paying bills. Accounts payable activity is usually recorded through bills and bill payments. Because bills have a location field, the bill payment transaction, which has no location field, usually picks up the location of the bill being paid. So what can go wrong? You will get unexpected results if the bill payment is applied to multiple bills that have different locations, or if the location is assigned to the bill after the payment has been made. How can you avoid this? Filter the Pay Bills screen for one location at a time, allowing you to show only bills due for each location. Then pay bills for each location individually. If the actual payment needs to be for the total amount due to the vendor, like on the A/R side, record multiple payments in QuickBooks Online and match those payments to the actual payment when it comes through bank feeds. Reclassifying transactions categorized by location. If clients accidentally attribute the wrong location to a transaction or they've just set up location tracking and want to assign locations to existing transactions, you can help them with the Reclassify Transactions tool. Note that this tool is only accessible to accountant users or clients with a QuickBooks Online Advanced subscription. You might think you can change or add a location by selecting the source account of the transaction because locations are assigned in the header, and they affect source accounts. However, the Reclassify Transactions tool doesn't allow you to assign or change locations on the source line, only on the target lines. What if there are multiple target lines on one transaction? In that case, the location will be changed on all lines, even if they post to different accounts. This is because clients can only have one location per transaction. Let's look at an example. Your client, Bob from Bob's Burger Joint, enters a transaction for $3,700, assigned to location A and split between two expense accounts. The transaction journal shows that location A is assigned to every line. You can use the Reclassify Transactions tool to change one line to location B, as shown here. Because there is only one location per transaction, the transaction journal now shows location B on all lines of the transaction. Using journal entries. Journal entries are the only transactions that allow you to add multiple locations. They don't have a source, but every line on a journal entry is a target. Because of this, it's important to remember that all lines on a journal entry that adjust a specific location should balance in order for the balance sheet to remain in balance. So you must debit and credit the same total amount to a particular location on a journal entry. Here's an example of a balanced journal entry. You could also use journal entries when you need to add more than one location to a transaction. Considerations when using location tracking. Keep the following in mind when you're working with transactions and location tracking is enabled. Select each question to learn more. Which transactions aren't supported by location tracking? The following transactions don't support location tracking. Journal entries with unbalanced locations. Invoices with billable expenses with no location or different locations. Paychecks allocated to multiple locations. Payroll liability payments. Prepayments from customers entered in the receive payment window. Pay bills with bill credit with a different location. Pay bills where bills entered for the same vendor have different locations. Payments for invoices for the same customer where the invoices have different locations. Transferred funds between locations. Discounts entered in the receive payment window. Discounts entered in the pay bills window. Inventory quantity on hand adjustments. What do you need to look out for with billable expenses? If billable expenses are added to an invoice, the payment won't show a location if the expenses don't have a location on the original expense, or they have a different location than the location on the invoice. All billable charges show in the customer's invoice drawer, but you can't see the location in the drawer, so you need to open each billable charge to see what location it was for. Then you can decide whether to pull the billable charge into the invoice you're creating for this location. In this customer invoice drawer, you can see that the location is Michigan. Alternatively, you can run an unbilled charges report with location as a default column. Do you need to assign a location to all transactions that support location tracking? Remember to assign a location to every transaction. There's no setting to warn you if you don't. If you don't specify a location, you'll see amounts in the not specified column when you run a report. However, you won't know whether the location wasn't assigned by mistake or intentionally. That's why you should use location tracking, or any method of advanced categorization, on every transaction once you start using the feature. How do you decide whether to categorize by class or location? If you believe that location tracking might benefit one of your clients, run some tests using the sample company. Set up location tracking in the sample company based on how your client would use locations and classes, then run some test transactions. That way, you can see whether you get the results and the reports you need. To help you decide whether to categorize transactions, products, or services using either classes or locations, ask your client the following questions. Do they need to run a balance sheet by category? Use location tracking. Do they need to put more than one category on a transaction? Use class tracking. Do they need a reminder to enter the categorization? Use class tracking. Note, if you're using any third-party apps that sync data to QuickBooks Online, explore whether they sync data to from the location category. Any third-party apps that use QuickBooks Online's platform would call this category the department ref field. If you're unsure, you can always contact the app provider and ask whether that field is part of their app. Pro Advisor Tip. Select and download the Location Tracking Hints and Tips resource for more information, including best practice workflows for sales and accounts payable. Summing up. Learning outcomes. Well done. In this lesson, we covered using location tracking in QuickBooks Online Plus and Advanced. Knowledge recap. With location tracking, your clients can track transactions by department, building, or city, even across different states. They can use this data to monitor each location's performance and to compare the figures from multiple locations. By adding levels of sublocations and combining class tracking with location tracking, clients can get an even more detailed view of their company's financial health. Next steps. In the next lesson, we'll cover tracking profitability by customers in QuickBooks Online.